JB, good to see you, brother. How you doing? How you been? Woodhouse, good to see you as well. How you doing, brother? How you been? How's it going? It's going good. Good to see you on Woodhouse. Hi, Miles. How's things? Autistic, good to see you. How you doing? JP with the first one in today. Good evening, Miles and CMF. Good to see you as well. XLP, how you doing? How you been? Some good news essentially is happening inside the crypto space. There's a lot of perspective changes, a lot of banking news to essentially go from tonight's live, and it's all positive, to be fairly honest. Now, let's do intro disclaimer. By that time, everyone should be tuned in for the first part of the live. Welcome to the CMF live show. If you're watching this for the first time ever, the CMF stands for Crypto Mouse Family. My name is Miles. You can tune to this live Monday, Friday, 10 p.m. London time onwards. For the most recent news regarding cryptocurrency, CBDCs, AI, politics, and regulations. Pretty much all the information you should know about regarding the world completely transforming into a digital space. We also do Q&As in this live as well, which means if you do have any questions, put it down in the comment section. More than happy to help you out. And the disclaimer of this live, as always, is not financial advice, not political advice, and whatever I say is only for entertainment purposes. So this is episode 417 of the CMF live show right now. Thank you so much to everybody who has already smashed the like buttons and the essential retweet buttons if you're watching this on X. And thanks so much to everyone who's also smashed the like buttons if you're watching this on YouTube. And a special thank you to everyone who has put a comment outside the live as well on X or on YouTube. If you haven't CMF members, just drop a like and retweet the live show. Now, on tonight's live show, there's a mixture of news to go through. We have a lot of banking news to go through. We have some Jerome Powell Fed news to go through. And also the announcements of the OCC, which is quite big, giving a green light to the banks. And some international bank movements happening inside the crypto space as well. It's all banking related today, but it's all crypto related and positive, which is what we want inside the crypto space. Before we go through any of that, and the first news essentially we are going to be covering is relatable to what could be essentially be expecting from the Fed. Let's go into the comment section first. This is what's happening there. Evening, Miles and CMF. Jason, good to see you. How you doing? Hello, Miles. Lena, good to see you. How you doing? Hi, Miles. When can we see a bull run? Can XRP hit $10 in a bull run? Yes, it can. When can you expect one? We're not that far off. Great news today. It absolutely is. Hello, Miles and CMF family. Carlos, good to see you. How you doing? How you been? Hi, Miles and family. Good to see you as well. How you doing? I'm getting very stressed from the low prices. Johnny, don't be too stressed. Hi, brother. Kamal, good to see you, brother. How you doing? Now, the first news on tonight's live, I'm hoping everyone's tuned in for the first part. The first news on tonight's live is relatable to the Fed. In other words, what could we be essentially expecting from Jerome Powell regarding rate cuts or regarding anything else he wants to come out and say? Is it positive? Is it negative? Or is it just going to be some neutral opinions? Well, what will the Fed essentially decide tomorrow? And essentially, here are some possibilities that we could maybe essentially be expecting. As the Fed essentially prepares to announce its most critical interest rate discussions of the year, tomorrow essentially at American Times, pricing on prediction markets and poly markets clearly shows investor expectations. Markets believe a 25 basis point essential rate cut in December's meeting is almost certain, the data shows. In poly market, 25 basis point essential rate cut scenario has cleared the lead with a 97% probability that we should be seeing a rate cut. A more aggressive 50 basis point or more of a rate cut scenario is priced in at only 1%. The chances of getting a 50% essentially rate cut is at 1% on poly markets, what people are assuming, whereas the others at end of the spectrum, 25 basis point cut rate is at 97%. There is no chance in interest rates options, which means the Fed will keep interest rates steady as essentially 3% probability. The market has completely ignored the possibility of interest rate hike. The 25 basis point or more interest rate cut scenario has a probability of less than 1%. Essentially, additionally, the Fed Chairman Jerome Powell will also hold a conference regarding the interest rate discussions tomorrow at 10:30 p.m. So tomorrow we'll be expecting some sort of a rate cut announcement or a neutral announcement from Jerome Powell. I think personally, since it is going to be Jerome Powell's, last ever one of the last ever essentially speeches he makes, I think he should make it a good one and deliver a rate cut. To play nice, to play ball with everyone. Or he can just be a Gary Gensler and ruin it until the last day he's removed from his position, because 2026 is going to be the year that Jerome Powell does get replaced. So he can either go out on good terms, or he can ruin it like Gary Gensler and then go out the door screaming and kicking. Either way is a possibility. Now, moving on essentially from Jerome Powell's Fed speech of a rate cut or not a rate cut to Bitwise CIO. But before we talk about Bitwise's CIO's news perspective, let's go inside the conversation first. Let's see what's happening there, and then go straight into that news. Let's see where we're at. Good evening, Brother Miles, the CMF family. Funky brother, good to see you. How you doing? Hi, Miles. Quarter of an hour late, but I hope I'm not missing much, mate. Good to see you, Addy. How you doing? Hello, Brother Miles. T, good to see you. How you doing? How you been? But no, you're perfect on time when you went for the first news. About to go for the second. Crypto index, essentially funds set for growth as market complexities rises, says essentially Bitwise's CIO. There's a prospective mood change happening in the world of CEOs and CIOs and executive board members. They're all coming out one by one now and suggesting that we could be on the uptrend and the bad side of the crypto space is done and we're going into the good side now. Funds tracking essentially baskets of cryptocurrencies will likely surge in probability as investors seek broader digital asset exposure, according to Bitwise's essentially Chief Investment Officer Matt Hugan. The prediction essentially comes as the market expands beyond Bitcoin dominance. Hugan essentially stated that crypto index funds will become significant in 2026. As the market grows, more complex and use cases multiply. He noted that while the overall market is positioned for growth, predicting which specific essentially tokens will outperform remains challenging. The investment chief essentially argued that owning a fund tracking the broader market provides a solid starting point for investors. Though he did not essentially acknowledge the approach that essentially does not suit everyone, multiple exchanges, essentially ETFs, including Bitwise's, offer products tracking various cryptocurrencies, similar to how the S&P 500 essentially tracks the top US companies. Multi-crypto essentially ETFs launched in the US earlier this year, holding digital assets proportionally to each token's market capitalization. These products have essentially seen modest inflows in essentially as the Bitcoin currently dominates nearly 60% of the market space. Hugan also stated that he cannot confidently predict which blockchain will succeed or how developers will unfold. Despite his experience and network of crypto experts, he described the accurate forecasting at the stage essentially as unknowable and shaped by regulations, executions, macro conditions, actions of key individuals, luck, and also numerous other variables that are in play regarding the crypto market space going to 2026. One thing that he mentioned regarding is regulations, which is absolutely key in 2026. And crypto projects that essentially are on the right side in terms of essentially having the asset classed by the SEC essentially, or essentially having the correct licensing going to 2026 or applying for license 2026, those crypto projects will be bringing essentially a lot towards the table compared to the ones that don't really have any sort of licensings. Crypto markets rallied essentially from November 2024 through January following Donald Trump's presidential election and inauguration, remaining elevated on pro-crypto policy expectations. However, essentially the sector has experienced negative effects from sweeping US tariffs and uncertainty over further essential interest rate cuts as traditional finance essentially involvements increase. Hugan also approaches focuses on buying the market through market cap weighted crypto index funds. He stated that crypto will far be important in 10 years than today, with potential of 20x growth over that period. Securities and Exchange Commission Chair Paul Atkins also commented that the US financial system could embrace tokenization within a couple of years. Hugan emphasized that stablecoins, tokenization, and Bitcoin will all matter more going forward, and with dozens of other major use cases following in areas like prediction markets, decentralized finance, privacy tech, and digital identity are going to be massive players going into 2026 and beyond. Hugan also himself uses a crypto index fund essentially as his portfolio core, essentially ensuring exposure to potential winners regardless of how the market evolves. Small Bitcoin holders also essentially are now coming back towards the crypto space, coming back towards Bitcoin essentially in the world of crypto, are drawing attention right now due to their significantly reduced activity on the blockchains before. But now there's a massive wave of small crypto buyers entering the crypto market space once again. Now, we all know that 2026 is only going to be essentially mostly about institutional players and high profile, high investors and so on, because now we're going into a very, very regulated market space, which means no more gray areas, no more Wild West. And, they feel more comfortable entering into the market space because now we went from speculative to a mature market space. So it's interesting to see that going into an institutional essentially market space, small-time buyers, in other words, the retail section, is now essentially purchasing quite a bit more than they were in the middle of the year, you could even pretty much say as well. So the retail section is coming back on the buying purchase. Now, moving on essentially from the perspective of essentially Matt Hugan of how he sees going forward in 2026, which I agree with everything he said regarding, crypto projects that have, essentially regulations coming in, and crypto projects that benefit from regulations will do the best. Facts. Crypto projects essentially that are heavy into tokenizations will do quite well. Yes. Crypto projects that have the most amount of partnerships, most amount of contracts, most amount of essentially, and the foothold essentially they have inside the financial sector will do the best going to 2026. I agree with all of that 100%. 2026, after regulations come in, it's going to show which crypto projects have been bluffing for the longest time and which crypto projects actually bring something towards the table. Now, moving on from Matt Hugan to Jack Marler. But before we talk about Jack, let's go inside the comment section first. Let's see what's happening there, and then we'll go straight into the next news. We were here. Hello, brother Miles. T, good to see you. How you doing? Miles, why the markets were up today for a while? It's because the OCC just green-lighted all US banks to get involved inside the crypto space. Hi, Miles. How was your week panning out so far? It's going to be an interesting week. This week, I'm actually going to the Cotswolds. Little family essentially getaway. I'm going to be leaving essentially Thursday, coming back on Monday. So we have to see if we can do the live show tomorrow or not, or the live show is going to be continuing either Monday or Tuesday. But I'll let everyone know about that. And what do you think of students pursuing essentially psychology? Is there a good scoop on future? Not really, I'll be very honest. If you want your kids to do well, forget about becoming doctors and engineers, because in about 10 years time will that be done by AI, or in 20 years time. Preferably there's two roles you could go in terms of education. One, you can learn more about blockchain technology and AI, because that is genuinely the future. Or two, just become a politician. The only two careers that will pretty much survive over time in 10 to 20 to 30 to 40 years are going to be people who understand the tech and develop and bring innovation based on the tech, and people who are just politicians. Honestly, becoming doctors and engineers is pretty much old news. Not saying doctors and engineers are not needed. Of course, they're needed 100%. But over time, what I'm suggesting is if you want to make money, there's two job roles you can go towards. One, understanding blockchain technology and AI. Two, just become a politician. Honestly, becoming a politician is a lot more easier than getting a job at McDonald's. Or essentially, not that there's anything wrong with anybody essentially working at a fast food joint, but becoming a politician is pretty much the most easiest job there is available. What do you think about hello, brother Miles and family commenters? Good to see you. How you doing? Good evening, Miles and CMF. Manny, good to see you. How you doing? Hi, Mr. Bailey. How are you? Guys, that was someone else. Guys, don't forget to like the live and retweet, please. Absolutely facts. If you haven't already smashed the like button, smash the like buttons and the retweet buttons. Miles, have you any views on OPS and Wilder Worlds? On Wilder Worlds, it's not really what I would say. Either one of them is not really what I would say essentially is a must-have crypto project. Hi, Miles. Happy to see you and the CMF family. Let's go facts news. Can't wait to get your answer about my question. Carl, no problem. One of the calls, was it Carl? Because we have two calls inside the live show. One's Carlos, the other one's Carl. Okay, I tried to call you, Carl, on Telegram. I called you twice, but you didn't pick up based on your question. Cotswolds is nice. You must visit Jeremy Clarkson's pub, the Farmer's Dog. I'm actually going to do that. Yeah, I'm going to visit Jeremy Clarkson's essentially pub, the Farmer's Dog, which we're happy, quite excited to do that, because I've always been a big fan of essentially, originally Top Gear, then became the Grand Tour. Always been a fan of that growing up. Now, good evening, Miles and CMF. Mickey, good to see you. How you doing? Jack Marler's firm is what we're going to talk about next on tonight's live. Expands Bitcoin holdings and strategies. 21 Capital, essentially led by CEO Jack Mallers, began trading on the New York Stock Exchange under the ticker essentially XXI, with a significant Bitcoin treasury exceeding 43,500 Bitcoins. The company's launch essentially signifies a noteworthy increase in Bitcoin exposure among public equities, potentially affecting market perceptions and investor sentiments towards Bitcoin. 21 Capital, essentially led by CEO Jack Mallers, has begun trading, and 21 Capital essentially is launching with over 43,000 essentially 500 Bitcoins on its balance sheets, and most likely going to be expanding on that as they go essentially more, as they essentially go beyond. And Jack Mallers, co-founder of 21 Capital, has emphasized the company's strategy to hold and potentially increase their Bitcoin exposures. The firm's New York Stock Exchange listing marks a significant step in integrating traditional finance with crypto assets. We're seeing more of this happening. Traditional companies creating some sort of Bitcoin portfolio, entering essentially and becoming a public company, or public companies in general who aren't doing too well creating essentially Bitcoin portfolio just to get more exposure in terms of their stock pricing. The firm's strategy essentially of focusing heavily on Bitcoin treasury assets may influence financial strategies within the industry. Other Bitcoin exposed companies could also see essentially increased interest as investors look for correlated essentially opportunities. The firm essentially approach could lead to increased Bitcoin demands and potentially affecting price dynamics in crypto markets. Investors and analysts will watch closely for any updates essentially from Jack Mallers, particularly regarding additional Bitcoin acquisitions. The listings of essentially 21 Capital on the New York Stock Exchange aligns with historical trends of companies integrating cryptocurrency holdings. This move could usher in broader regulatory essentially discussions and technological advancements as traditional finance meets digital assets. This is brilliant news essentially for Bitcoin, good news for the crypto space as well, regarding another company, bringing exposure to a crypto space, entering essentially the financial space, and connecting blockchain to traditional finance. Good news, brilliant news. Moving on from Jack Mallers' essentially 21 Pilot company to Strategy, another essentially Bitcoin treasury company. Strategy's chairman proposes Bitcoin-backed banking system. Oh boy. So this is what Michael Saylor has just suggested. Michael Saylor has pitched nation states on developing digital banking systems backed by Bitcoin reserves that could offer regulated accounts with higher yields than traditional deposits. Was Michael Saylor not there for 2008? Or, essentially, was he not born during, was he not alive during 2008? He didn't see the massive, colossal collapse of the financial sector in 2008. Because they did something very, very stupid in 2008. Not that Michael Saylor did it, but the banks definitely did it. Fast forward to 2025, suggesting going into 2026 that all banks should be backing their bank up with Bitcoin is the most stupidest idea I've ever heard. Nothing against Bitcoin in any sort of way. I'm the biggest, essentially, blockchain pro person that pretty much is, one of the biggest. But the idea that American banks, especially, because if American banks go down, the entire world goes down. If American banks are essentially backing themselves with a Bitcoin, essentially holding Bitcoin as their backing, not knowing still who the founder of Bitcoin is, not knowing when he's going to decide to dump his entire portfolio on the market space, could essentially create a bigger crash than 2008 for the rest of the world. You know why? Because whatever the Americans do, other countries tend to follow it like a domino effect. So if American banks decide to start backing their banks up with Bitcoin treasuries, other banks will decide to do the same thing around the world. Hong Kong might follow its suit. Japan might follow its suit. South American countries will follow probably in suit. Saudi Arabia, UAE, Kuwait, Bahrain, Qatar, the list will go on. And then essentially the founder of Bitcoin, whoever he may be, or she may be, or group it may be, or government entity may be, one day decides to essentially, because their portfolio will just get bigger and bigger and bigger, from billions it could go to trillions if that happens. And then if he decides to dump it on the market space, it will cause a shockwave the world has never seen in the financial sector, where the world would collapse overnight. Never mind what happened in 2008. 2008 will look like a speck of what's to possibly to come if that ever happens. So I get the idea that Michael Saylor is passionate about Bitcoin, or he's just stuck with a massive portfolio and needs some bigger players, because it turns out he's the biggest player inside the Bitcoin treasury sector. BlackRock obviously does have the biggest Bitcoin ETF, but they're very different essentially how MicroStrategy does it. And maybe MicroStrategy just wants other big players to say they're inside of it in terms of their own portfolio, not their client's portfolio. So I think it's a stupid idea from what Michael Saylor has just suggested. Going for an asset, especially recommended to the banks, American banks especially, going for an asset that nobody knows who's behind it, and not knowing exactly on the dot how much essentially the founder of Bitcoin owns and how much he could possibly dump somewhere down the line, is a very stupid idea. Saylor essentially stated countries could use overcapitalized Bitcoin reserves and tokenized credit instruments to create regulated digital bank accounts offering superior returns. He noted that bank deposits in Japan, Europe, and Switzerland provide minimal yields, with essentially Euro money market funds pay roughly 150 basis points and US market essentially rates approach 400 basis points. The executive essentially explained that investors turn to corporate bond markets because they are disinfected essentially with bank accounts and returns, or essentially outlined a structure where digital credit instruments comprise essentially roughly 80% of the fund, paired with 20% in fiat currencies and a 10% reserve buffer to reduce volatility. Such a product offered essentially through a regulated bank could attract billions in deposits seeking higher returns. According to Michael Saylor, the account essentially would be backed by a digital credit with 5-to-1 over-collateralization held by treasury entities. Saylor essentially claimed a country offering those accounts could attract $20 trillion or $50 trillion in capital flows. He argued a nation adopting this model could become the digital banking capital of the world. Look, I agree with essentially banks going digital, governments going digital. I agree with all of that. But the idea of using Bitcoin as that backbone is just stupid. It's very, very stupid. One, we don't know who created it. Two, the person that essentially did create, or the entity that did create it, holds a substantial amount that could be dropped on the market space at any possible given time and cause a ripple effect of collapses, bank-run collapses around the world, if that ever does happen, if the banks essentially use a 5-to-1 over-collateralization of Bitcoin. And three, this is the best way for Michael Saylor, honestly, to make, a tremendous amount of money, to be fairly honest. This works out very beneficial for Michael Saylor, very beneficial for essentially Bitcoin holders, the ones that have above essentially 100 or to 1,000 or to 10,000 Bitcoins. So works out very beneficial for them, but it shows the positives, not the negatives. The remarks followed essentially strategy disclosure that it purchased 10,624 Bitcoins for approximately $962.7 million last week. The latest acquisition essentially raised this company holdings to 660,624 essentially Bitcoins, purchased for roughly $49.35 billion at an average cost of essentially $74,696. Saylor's description essentially echoes elements of Strategy's own offerings. The company introduced essentially stocks in July, a money market style preferred share with variable dividend rate of essentially around 10%, designed to maintain its price near par essentially while backed by Strategy's Bitcoin-linked treasury operations. The product essentially has grown to approximately $2.9 billion in market cap, and Bitcoin currently trades at around essentially $90,500, about 28% below its October all-time high. The company continues to expand its Bitcoin treasury strategy as institutional interest in digital asset exposures grows across traditional financial sectors. I just want to point out one thing. This downtrend we had inside the market space was putting a lot of pressure on MicroStrategy. The downtrend that we had for a space of a month, it put a lot of pressure on Strategy, on Michael Saylor, even though he said, we'll be pretty much fine for the next essentially, 20 months. We can still pay our debts. There's no issues whatsoever. It still puts a tremendous amount of pressure on Strategy and Michael Saylor. And that will be nothing compared to every bank being involved and the founder of Bitcoin decides to dump his bags. That wouldn't be pressure. That would be collapse, is what essentially would be happening. Now, they tried to do Bitcoin NFTs through Binance, and it essentially congested the network. So I don't know what his obsession is with essentially Bitcoin's network, because there are much more superior tech out there compared to Bitcoin's blockchain, much more superior tech. Now, PNC is what we talk about next on tonight's live. PNC becomes the first major US bank to offer essentially integrated Bitcoin trading for wealth clients. The idea of essentially offering trading services to clients, sure, go ahead. But the idea of being backed, essentially overcrowded by the bank, that's a bit of a stretch. Now, PNC Bank essentially has officially entered the digital asset arena, launching essentially native Bitcoin trading. The first token is starting off as Bitcoin, then expanding on later for its eligible private bank clients through a partnership with Coinbase. This is great news because it shows the crypto space is maturing. The move establishes PNC as the first major US bank to provide direct spot Bitcoin access inside its own essentially digital banking environment, without redirecting essentially users to external exchanges. The new service is powered by essentially Coinbase's crypto as a service infrastructure and is now embedded directly into PNC's portfolio view platform. Qualified high net essentially worth clients can buy, sell, and hold Bitcoin through their existing essentially accounts, mirroring the experience of managing traditional assets. PNC chairman and CEO essentially Williams highlighted that clients have been pushing for trustworthy digital asset access. They're starting with Bitcoin, expanding later on down the sheets. In other words, Ethereum, XRP, Solana, AVAX, and list just will go on. That's brilliant news from PNC Bank. Whenever we get news about more banks entering essentially the crypto space or taking one footsteps or many footsteps or expanding by doing some sort of crypto blockchain partnerships, it's brilliant to hear that. It shows other firms to get more confident entering the crypto space as well. Now, moving on from that to the CFTC. Before we talk about the CFTC, let's go start a conversation first. This was happening there, and then we'll go straight into the CFTC news. So, we were here. Good evening, Miles, the CMF. Mickey, good to see you. How you doing? Hi, Miles, the CMF family. Hope everyone is good. Ronnie, good to see you. How you doing? Good evening, Miles, the CMF. Free and Faber, good to see you. How you doing? Hi, Miles. Sorry I missed your call. I was driven back home with my kids. Can you please contact me later after the live show? Yes, no problem. Good evening, Miles. How are you doing? I'm doing great. Callie, good to see you as well. Evening, Miles and the family. Susie, good to see you. How you doing? Miles, would it be wise to swap my XLM, XDC, and HBOR for XRP? What I mean is, will I get better essentially return on my investments by doing this? This will mean I'm all in on XRP only in your viewpoint. Yes. However, not financial advice whatsoever. XLM is an amazing asset. XDC is an amazing asset. HBAR is a great asset as well. XRP is just a better asset. So if you want to take that route, why not? But putting that to one side, those are still amazing assets. Now, not financial advice at all. CFTC is what we're going to talk about next on tonight's slide. The CFTC launches essentially a digital asset pilot program allowing Bitcoin and Ethereum as derivative collaterals. Now, there's more to this, which I'll review at the end of the live show. But for now, let me just read you this. The U.S. Commodities Futures Trading Commission announced a pilot program allowing Futures Commission merchants to accept Bitcoin and Ethereum and USDC as margin essentially collateral in derivative markets, according to Cointelegraph. Acting Chairman Caroline Pam stated the program establishes a clear essentially guardrail to protect customer assets and provide enhanced CFTC monitoring and reporting. The pilot permits registered futures commission merchants to use these digital assets for margin requirements. Essentially, participating firms must submit weekly reports on total customer holdings and any issues affecting crypto essentially collateral use. The CFTC simultaneously issued updated guidance on tokenized assets and withdrew essentially the Staff Advisory 20 to 34 from 2020. Which essentially previously restricted virtual currency use in segregated customer accounts. The agency also cited the Genius Act as a passage of rendering the old advisory outdated and no longer relevant. So good to see and great to see the CFTC putting the old traditional ways behind them and adapting to essentially the new future, which is all about digital finance. Bloomberg reports essentially that the initiative applies to future brokers, swap market participants, and clearinghouse. The collateral essentially guidance covers tokenized essentially versions of the US Treasury and market money funds, with requirements for asset segregation, reporting, and surveillance. Circle's CEO Heath also said the changes will reduce settlement risk and friction in derivative market spaces, though near-term essentially real margin settlements. The pilot program essentially directly addresses capital inefficiencies that has essentially constrained crypto native firms in traditional derivative markets. Traders also essentially can now post Bitcoin or Ethereum holdings as collateral without liquidating positions into cash. This eliminates the trade-off between maintaining derivative exposures and keeping capital deployed in crypto strategies. Digital assets also operate essentially on 24/7 settlement cycles, enabling real-time margin adjustments when the markets move outside regular banking hours. With essentially when Bitcoin drops during weekend hours, firms can immediately post additional crypto collateral rather than waiting until Monday to access traditional funding sources. This operational essentially improvement reduces settlement failures, risk, and liquidity squeezes and scenarios during periods where banking infrastructure is completely offline. Previously was reported that the 15 US states are moving forward with plans for a Bitcoin reserve or a crypto reserve, with Pennsylvania, Arizona, and New Hampshire proposing allocations up to 10% of public funds. The CFTC pilot program extends this institutional legitimacy into derivative markets, providing essentially regulated entities with practical tools to manage Bitcoin exposure or crypto exposure while meeting margin obligations. State Treasury departments also pursuing essentially Bitcoin allocations or crypto allocations now have additional options for deploying holdings in regulated financial markets. This is all brilliant news, amazing news. CFTC greenlighting crypto derivatives, essentially Bitcoin and Ethereum, and the 15 US American states still pushing for essentially some sort of a crypto basket or a Bitcoin essentially treasury. All great news. The US derivatives market essentially representatives approximately 27% of the global $700 trillion derivative sector, but has lagged behind offshore venues in crypto derivatives and innovation. Platforms outside the US jurisdiction have dominated essentially Bitcoin futures trading, with significant essentially monthly volumes following through unregulated exchanges. The CFTC pilot represents a strict effort to recapture capital that migrated offshore due to regulatory uncertainty. Institutional participation in crypto derivative markets has grown substantially in 2025. CME Group reported that Q3 2025 saw combined futures and options volume exceeding $900 billion. So the numbers coming in are actually very, very good for the crypto space, with an average daily of open interest reaching $31.3 billion. Institutions contributed approximately 42% of the total derivatives trading volume during this period. These sophisticated risk managers understood collateral optimization, and allowing crypto collateral should accelerate institutional participation through improved capital deployment and efficiencies. The pilot faces operational challenges related to crypto asset volatility compared to traditional collateral. Recent Bitcoin price movements from above $100,000 to around $95,000 triggered $750 million in liquidations. Clearinghouses must manage mark-to-market essentially risk while essentially evaluating whether crypto collateral acceptance amplifies essentially during essentially sharp price declines. The 3-month essentially trial period within a weekly reporting requirements gives regulators real-time data on how tokenized collateral platforms during volatile market conditions before determining the next step for a broader adoption. So, 1. The CFTC essentially greenlighting the idea of derivative markets connecting towards the crypto space. 2, the derivative markets, traditional derivative market space, is bringing a tremendous amount of volume and liquidity. They're suggesting the derivative market space connecting to essentially blockchain market space, to decentralized market space, or essentially to centralized market space, could bring a tremendous amount of liquidity for the crypto space. 3, the only thing they essentially, they're still greenlighting it, but the only thing they're trying to figure out is the volatility inside the crypto space. Now, in my opinion, volatility can be maintained in a regulated environment. But if we're stuck in the Wild West with no regulations, then obviously volatility is going to be there and it's going to be quite high. But if we're in a regulated environment with essentially a Clarity Act and some other regulations put into place, the manipulation will be a lot less than what it is right now. So that could essentially be controlled. The volatility can be controlled. So the 2 points to take away from that one essentially is 1, CFTC greenlighting derivative market space. 2, derivative market space connected to the crypto space adds a tremendous amount of liquidity, which is what we like to hear. Now, JP Morgan is what we're going to talk about next on tonight's live. Before we talk about JP Morgan, let's go inside the comment section first. Let's see what's happening there, and then we'll go straight into the next news. As I said previously, this is live, which means if you do have any questions or comments, put inside the comment section. I'm more than happy to help you out. So, Let's see where we're at. Sorry, comment section. We were here. Good evening, Miles. How are you doing? I'm doing. Nope. Okay, we were here. If it helps, at some point, I personally sold all my coins for profit and exchanged all of it for XRP, not financial advice. Fair enough. Even Miles and CMF, hi everyone. Good to see you, Joe. How you doing? Why not? And if you want to do that, why not? It's not a bad idea, in my opinion. Show some love, like and repost, guys. Facts. Let's go, Joe. What up, Miles and CMF? Ray, good to see you, brother. How you doing? If you haven't liked or retweeted, smash the like buttons and smash the retweet button, CMF members. Now, JP Morgan. JP Morgan's analyst discusses a Bitcoin sell-off and no more crypto winter. So this is what's happening. JP Morgan's analysts reportedly asserted doubts about an impending essentially crypto winter despite a notable Bitcoin sell-off that's been happening aimed at market uncertainties. The alleged stance challenges widespread bearish sentiment, suggesting resilience in institutional interest and potential market stabilization through primary sources and verifications remains pending. JP Morgan's analyst addresses Bitcoin sell-off concerns, suggesting no immediate crypto winter whatsoever. JP Morgan's analyst, the most simplest way to put it, is suggesting that we're coming out of that crypto winter scenario and we're going to be going on the upside. Why? Because of institutions and high-profile clients entering the market space due to regulations. JP Morgan specialists highlight recent Bitcoin market actions without confirming a prolonged downturn. They retreated their essentially stance on current market volatility and maintained a cautious outlook. Recent remarks by JP Morgan's analysts address concerns over meaningful Bitcoin sell-offs, despite essentially market fluctuations. An analyst was essentially reserved about the onset of the new crypto winter. JP Morgan specialists also highlighted the recent essentially market actions without confirming prolonged downturns, and industry reactions to the analyst's essentially perspective comments have been quite mixed, with some traders voicing skepticism and analysts stressed that the importance of historical market behavior in shaping future expectations. Potential financial and technological impacts hinges on Bitcoin's market performance. I want to say yes, it does hinge on Bitcoin's market performance going forward for the rest of the crypto space. However, regulations will essentially make certain crypto projects decouple from Bitcoin's footsteps and essentially go on essentially their own path due to the contracts they have in place, because Bitcoin may not have the exact same contracts with them. Experts essentially also suggest that outcomes aligned essentially with historical trends, relying on past data to anticipate market directions. They underscore the significance of understanding historical patterns for informed predictions. Also, analysts cite past Bitcoin cycles, such as the 2018 essentially downturn, to essentially current trends. They emphasize that the market patterns often repeat, shedding light on essentially present movements. Yes and no. Regarding essentially, sticking to the past and seeing what happened inside the past to predict the future, yes, but suggesting the past will most likely always be repeating inside the future is a bit of a yes and no type of scenario. History does tend to repeat itself, but that's only because people are forgetful. But what we've got to understand is what's happening inside the crypto space has never happened before. As I said, essentially a year ago, when the institutions entered towards the market space in terms of the ETFs, you could do pretty much say, even before that, we found out this year that certain wallets during Bitcoin's essentially founder era, during Satoshi Nakamoto's essentially era, some of those Bitcoin wallets were actually hedge fund wallets. And nobody saw that coming because everybody just assumed it was just random people in their bedrooms mining Bitcoin during Satoshi Nakamoto's era. Turned out to be some of those wallets were hedge fund wallets. So, based on that, we've got to understand that obviously the market space is changing. A lot of things are happening now that have never happened before. So I could see why essentially, JP Morgan is coming to the understanding of we're coming out of a Bitcoin winter because we're going into regulations and because institutions and high-profile investors are getting ready to enter the market space. So I understand why they said that. Now, moving on from JP Morgan, but into another banking news. GoTime Bank is what we're going to talk about next on tonight's live. But before we talk about that, let's go to the comment section first. Let's see what's happening there. Then we go straight to the next news. Even Miles, Joe, let's go. Show some love. Let's go, Joe. Absolutely, Ray. Let's go. Now, okay, we're here. Miles, how come the markets were up today for a short while? It was based on essentially what the OCC had to say, based on essentially anticipation of a Fed rate cut as well. Morning, Miles, the CMF. Good to see you, well, Shelly. How you doing? How you been? But yeah, it's just based on anticipation why the markets were up for a short while, and also based on the OCC announcement, which we're going to go through on tonight's live. and also the anticipation of a rate cut happening from Jerome Powell's speech tomorrow. Now, GoTime Bank launches crypto trading services. It's not just American banks that are getting more involved inside the crypto space. It's also international banks. In other words, a Filipino bank. GoTime Bank has introduced crypto trading services for its 6.5 million users in the Philippines, partnering essentially with Alpaca to facilitate this offering. This partnership could enhance crypto adoption in the Philippines by integrating digital assets with traditional banking. If you want to yourself, you live in the West, what's the relevance of a Filipino bank offering crypto services? Well, it's liquidity. That's the relevance. GoTime Bank has officially essentially launched crypto trading services for 6.5 million Filipino users through a partnership with Alpaca. The service is integrated into the GoTime app, enabling users to invest in selected cryptocurrencies securely under regulated conditions. In this collaboration, GoTime Bank is essentially leveraging Alpaca's broker API platform, introducing essentially Bitcoin, Ethereum, and Solana as the primary support cryptocurrencies for now. The partnership emphasizes simplicity, essentially accessibility for everyday users. As essentially Yoshi, the CEO of Alpaca, stated, this is what essentially they have to say: "We're proud to support GoTime Bank in making crypto trading simple and accessible for everyday users and capturing the growing convergence of traditional finance and digital assets." The Philippines is one of the earliest adapters of digital assets, and we're excited that Alpaca GoTime Bank is enabling millions of Filipinos to confidently build wealth and participate in the global digital economy. The launch marks a significant shift for the Filipino financial market space, opening regulated access to digital assets. This influences the local crypto landscape, aligning with the government's essentially regulatory framework and ensuring compliance with crypto essentially in terms of their transactions. The integration of crypto services by GoTime Bank is also aimed at addressing currency fluctuations and concerns among Filipinos. This initiative essentially positions the bank as a leader in the digital financial services, fostering essentially broader crypto adoption in the region. GTB to launch new services. The potential outcome include increased crypto adoption among everyday users, contributing to a broader digital economy. And experts view GoTime Bank essentially as transformative, especially for users unsettled by currency fluctuations in deprived, essentially, sometimes regarding their own currencies not doing too well, their own traditional currencies not doing too well in their own jurisdictions, which I fully understand. Now, this is incredible news. When it's banking news, it's always good news, positive news for the crypto space. 6.5 million users getting access towards the crypto space equals to essentially liquidity, not over time, essentially, not overnight price action, but over time price action is essentially what's going to be happening there. Obviously, they're not the only banks. There's essentially American banks, Singaporean banks, Hong Kong banks, the Middle Eastern banks, South American banks, and the list just goes on. They're all involved inside the crypto space. Now, going back to the US banking sector, the US bank, essentially regulator, clears national banks to facilitate crypto transactions. This is essentially what's helping this positiveness that's going on right now inside the crypto space. The OCC greenlighting banks and crypto. So, the OCC has affirmed that the national banks can essentially enter the cryptocurrency trades and essentially a riskless principle without holding the assets on their balance sheets, a move that brings traditional banks a step closer to offering regulated crypto brokerage services. An imperative letter essentially released today by the OCC. The regulator said banks may act as a principal in crypto trade with one customer while simultaneously entering an offsetting trade with another, a structure that mirrors a riskless essentially principal activity in traditional markets. Is also what essentially Ripple offers with the XRP ledger, and XRP playing as the middleman asset. And also the OCC is the one that's supposed to be greenlighting Ripple as well. Interesting that the OCC comes out with this letter today regarding banks being able to do a transaction inside a crypto space from one end and the other, and something in the middle playing a role. Several applicants essentially have discussed how conducting riskless essentially principal crypto asset transactions would benefit their proposed bank customers and businesses, including essentially by offering traditional services and a growing market notes to documents. According to the OCC, the move would allow customers to transact crypto assets through a regulated bank, as compared to non-regulated or less regulated options. So banks being able to do crypto transactions for their clients, accepting a certain crypto here and offloading a certain crypto wherever it may be in any other country. The letter also retreats that the banks must confirm the legal, essentially, permissionability of any crypto activity and ensure it aligns with their chartered powers. Institutions are expected to maintain procedures for monitoring operational compliance and market risks. The main risk is riskless, essentially principal transactional is counterparty credit risk, in particular settlement risk. Reads the letter, adding that the managing counterparty credit risk is internal to the business and of essentially the banking, and banks are essentially experienced in managing this risk. The agency also guidance cites 12 USC, essentially S24, if anybody wants to go read it, that's the document code, which permits national banks to conduct riskless principal transactional, essentially as a part of business and essentially of banking. The letter also draws a distinction between crypto assets that qualify as securities, noting that riskless essentially principal transactions involving securities were already clearly permissionable under existing law. The OCC essentially imperative letter are a non-binding essentially guidance that outlines the agency's view, which essentially activities national banks may conduct under existing law, was issued a day after the head of the OCC, Jonathan, said crypto firms seeking a federal bank charter should be treated as the same as traditional financial institutions. Just want to mention one thing before I read a little bit more on regarding Jonathan, because Jonathan seems like a very, very intelligent man who runs the OCC, who understands that the world is changing and it's either, essentially adapt to this new world or get left behind. And obviously the US has to adapt because it leads the world in terms of finance or in terms of anything else. Now, what Jonathan said essentially yesterday, which was that essentially crypto companies are the future and crypto companies essentially entering the banking essentially, field is amazing news. Crypto companies applying for banking charter license also, they should be treated like a traditional institution. Who's applied for a banking license charter? Ripple, Circle, Paxos. Who's also offering a service where a certain crypto project plays a middleman role between two transactions? Ripple, XRP. According to Jonathan, the banking system has the capacity to evolve, and there is no justification for considering digital assets differently than traditional banks, which have offered custody services electronically for decades. Do you know what this indicates? The indication that essentially you would get from reading this is that the OCC is getting very, very close to greenlighting Ripple's essentially banking charter license and a Fed master account or skinny account. Under the Biden administration, essentially, some industry groups and lawmakers accused US regulators of pursuing Operation Choke Point 2.0, which was under Biden's era. But that essentially has went completely away. And the OCC is more pro-crypto than ever before, and that's only because of Trump's presidency. Since President Trump took office essentially in January after pledging to support the sector, the federal government has moved in an opposite direction, adopting essentially a more permissive essentially posture towards digital asset activity, and we can definitely see that happening. One, the OCC seems a lot more keen towards the crypto space. Two, the OCC suggesting that crypto companies should be treated like financial institutions once they get their banking charter license. Three, the OCC is suggesting that the American banking system needs to evolve, and no matter how many letters the OCC receives from banking associations, from the banks, suggesting that they should slow down the crypto companies, the OCC doesn't care about the banks or doesn't want to listen to them in any sort of a way, and is instead seeing the future, which is digital payments. Four, what the OCC is suggesting essentially from this new payment system where banks are able to do frictionless payment systems, essentially one currency from another, and something plays a middleman role, is exactly what the XRP ledger was designed in terms of what XRP plays the middleman role for. Ripple applied for the OCC for a license. OCC loves the idea of essentially crypto companies, loves the idea of crypto companies being connected to banking infrastructure, should be supported the same way. And is now suggesting the same thing the XRP ledger offers. Moving on from what the OCC has said, which is extremely positive, to, and it shows you what's going to be happening in 2026 and how close essentially Ripple or Circle or even Paxos may be to essentially a green light bank chart license, and a Fed or Fed skinny account. Moving on from that to Cathie Woods. Cathie Woods, essentially, the CEO of ARK Invest, has came out today and said that the Bitcoin 4-year cycle is broken. That the 4-year Bitcoin cycle doesn't exist anymore. And the reason why it doesn't exist is because of 1, institutions, 2, ETFs, 3, ETPs, 4, regulations, 5, governments, 6, banks. The list just goes on. All of these things changed the structure of Bitcoin's 4-year cycles, because it doesn't rely only on retail and hedge fund manipulation, but it relies on more than just a 4-year cycle. Cathie Woods, CEO of ARK Invest, asserted essentially today that Bitcoin's traditional 4-year cycle has been disrupted, potentially reaching its cycle low as reported essentially by Bitcoin Magazine. The statement reflects a essentially shift towards macro and liquidity-driven cycles instead, impacting institutional strategies and potential Bitcoin valuations, influencing investor sentiments and market dynamics significantly. ARK Invest Cathie Woods recently claimed that Bitcoin's traditional 4-year cycle is primarily influenced by halving events, is shifting towards macro-driven models instead. Woods essentially posts that global liquidity and institutional flows are now key factors in Bitcoin, not its 4-year cycle of a halving cycle, essentially, potentially rendering previous cycle patterns obsolete. The implementations of, in other words, the previous cycles we've had regarding Bitcoin and the rest of the crypto space doesn't even count anymore essentially going forward. The implementations of this shift are becoming apparent, with the possibility that a Bitcoin cycle low has been reached. A Bitcoin cycle low has been a key focus for investors, with Woods' exhortations suggesting that the new factors, such as macroeconomic conditions, could usher in a new era of Bitcoin growth, driven by institutional adoption and global liquidity. Cathie Woods, founder, CEO, and CIO of ARK Invest, said, "We believe that Bitcoin's trajectory is now driven more by global liquidity and institutional adoption and its role as a macro asset than by the traditional 4-year halving cycles." I just want to say one major thing. I said this to everybody a very, very, very long time ago, actually, which ironically is also what Shelley has just put inside the comment section, which you told us a long time ago. Your crystal ball was right again, Miles. It definitely was. And I said this essentially a year ago, 2 years ago, I said it again. 2 years ago, I said it. A year ago, I said it again. Well, everybody else couldn't see it. Nobody else could see it, essentially. But it's good that Cathie Woods, essentially CEO of ARK Invest, coming out today with this bold speech. The 4-year Bitcoin cycles are done. Now it's about regulations, institutions, ETFs, ETPs, macroeconomic events, and so on. And that the old cycle of Bitcoin halving, Bitcoin going up, feeding into Ethereum, feeding into the altcoins is pretty much done. It's left behind. It's obsolete. The data doesn't even count anymore going forward. Saw that coming 2 years ago. Not to, and it's not just to brag or anything at all, but if you tune into my live shows, you'd pretty much get a head start. Which you told us, yep. You said that a long time ago. I did JP Facts, and I did Shelley's All Facts. Miles' crystal ball, always on point. Let's go, Ray. Miles, what's your estimates when we will see 2 to 3 or 4 figures of XRP? We seem to be losing patience. Paul, do not be losing patience in any sort of way at all. We are getting closer and closer to a regulated environment inside the crypto space. I just want to say one thing, and I'm going to write an article about this, essentially. Not an article, but more like a thread, essentially. I might even turn it into an article, but a thread on X. And I'm going to put, essentially, what's more important to everyone? Price action or a strong foundation? The difference between price action and a strong foundation is that price action, you would see the price shoot up, but it's not stable, and it will come rocketing back down for a while and then shoot up, and then come back down for a while and then shoot up. Now, versus essentially a strong foundation, which is essentially when the foundation is strong enough for certain crypto projects, the crypto project itself can go on the uptrend. Not saying essentially it's never going to come back down. It is, but not the way it happens when there is no strong foundation. When there's a strong foundation, you would see a crypto project go up based on ETF inflows, based on its utility, based on its essentially the amount of money that comes in for ETPs or ETFs. But that's only based on essentially the utilities bringing towards the table. The confidence it shows inside the financial sector of banks being able to use it, institutions being able to use it domestically or internationally. So honestly, what matters most is not price action. It's a strong foundation. Price action is up, down, up, down, up, down. A strong foundation is slow movements. But once it reaches a price point, it wouldn't just collapse completely because now it's being used. And that's only based on because of utility. It's being used 24/7. So it can't be manipulated to a fact, to essentially to come skyrocketing down. We don't have regulations that we want, which is hence why we have so much price fluctuation, so much volatility inside the crypto space, where we could see a crypto asset go from here to here in about a space of a month and then back to here. But under a strong foundation, which is regulations, utility, institutions, governments, and so much more, on a strong foundation, we wouldn't see crypto projects go from here to here and then go back down to here for about a month or two and then go back to here and so on, because it can't be manipulated in that sector. It can't be manipulated in that way. Manipulation will exist, but it wouldn't exist on the same level there is on essentially, price action versus a strong foundation. So don't worry too much about price action. Just stick on the side of a strong foundation, because we are closer than ever to a regulated, foundation, to a regulated foundation. And that's what we want. We don't want, essentially XRP, going to, for example, I don't want to see XRP go from, the prices at right now, let's say essentially around about $2. I don't want XRP to go from, let's say, $2 to $10, and then within a space of 3-4 days comes back to $1. I don't want to see that happening. I don't want to see XRP essentially go to $50 essentially and go back to $5. I don't want to see that happening. I want a strong foundation. I want XRP to elevate and go up. Come back down, sure, but not from a ratio of 50 to 5 or essentially 10 to $1 or something like that. I don't want that for the majority of the crypto space. I don't want that to happen to essentially AVAX or Solana or Ether. I just don't want that to be happening. And that won't happen as long as we have a strong foundation. A strong foundation equals to essentially regulations and utility. When regulations is not there, utility won't be there from the institutions either. And when those two things are not there, what's instead is that essentially is there is whale manipulation, news manipulation, hedge fund manipulation. You get the scenario. And that causes price from here to here, price from here to here, price from here to here. And we don't want that. I don't want to see crypto projects go from here to here and then the next few days comes back down to here. So forget our price action. It's a strong foundation is all that matters. A strong foundation will give you that price action, a price action that is stable. A project that essentially like XRP could go from essentially $2 to 10 to 20 to 50 to 100 to 1,000 and stay there. That's what we want to see. So don't be losing patience, because we're closer than ever before. We have regulations we've never had inside the crypto space. Honestly, in the past, essentially not even in the past, a year ago or something, or even this year, the beginning of the year, everyone was so excited for the crypto space. Even a year ago, everyone was so excited for the crypto space. But we're getting so close to the finishing line that, frustration should not be kicking in. We're closer than ever to a regulated environment. Having regulations that we've never had before. We have institutions inside the crypto space we've never had before. We have banks that we've never had inside the crypto space before. We have governments involved inside the crypto space. There's so much that is essentially happened so far for the crypto space that is all exceptionally bullish. Price action might not show that because we don't have a strong foundation, but so much has happened for the crypto space to feel frustrated or to give up this close to the finishing line is ridiculous. If you wanted to give up, you should have never entered in the crypto space. Not saying this to you or to anyone, but in general, you can't give up now. You shouldn't have entered into the crypto space because you're closer than ever to a finishing line. Now, so don't get frustrated. And I did say also 2 years ago, the last step essentially before everything finishes will be frustration. Miles, my Ledger Nano essentially X775BD updated, new device 75BD. Is there any wrong? It updated by itself, but you did the update for Ledger. If you did it through Ledger yourself, then it should be good, no problem. Yep, 2 years ago, it was welcome the news. Let's go, Susie. Miles, do you think the Fed will lower interest rates in the US? I hope so. I hope essentially Jerome Powell, lowers the Feds and he goes out on a good note. I hope he doesn't, act like Gary Gensler and try to ruin essentially the market space before he leaves. Is exactly what Gary Gensler did. On his last essentially few days, decided to, counter the XRP in essentially the lawsuit, the Ripple lawsuit. What an absolute idiot he was. And what a pathetic child he was essentially for doing that. So I hope Jerome Powell doesn't take Gary Gensler's footsteps by ruining the market space before he leaves, essentially, because his terms come to an end in 2026. I hope he leaves on a good note and does a rate cut, because he can. He can at least do a 25 basis rate cut if he wanted to. Even though all of the data might not be there, but he can still do a 25 basis point cut rate. I mean, the banks are suggesting it, the other Fed members are suggesting it, economists are suggesting it. Howdy everyone, Lunar Classic, let's go. Thompson, how you doing? XRP, XLM, XRP, XLM, HBAR, XDC, AVAX, ACH, NEAR, Quant, Ondo, File. My portfolio of these got a good future in this new cycle. Ron Miles, let's go T. Yes, facts. Luna sees fire. Let's go Thompson. There is another potential shutdown in January. Yes, it is a potential shutdown in January, to be fairly honest. But again, that depends on the Democrats. If the Democrats really want to, they can essentially ruin the market space again. I hope the Democrats don't. The Democratic Party hate the American people. I've said this multiple times. They're the only ones that have essentially decided to always go against the crypto space, no matter what. Anything that Trump likes, the Democrats hate. So I think the best play for Trump would be to come out and say, I don't like crypto. That might essentially cause a shockwave inside the crypto space, but it might also get the Democrats off our backs. Because I think Trump likes the Democrats hate. They couldn't care less who it might hurt in the process. By doing a massive long government shutdown, it ruined essentially the crypto space because we were supposed to get a Clarity Act. But we couldn't. Because those idiot buffoons that we choose to lead us, instead, he listened to a ditch. And that's probably the frustration lies in here. I think everyone just essentially thinking that by Christmas we would be worth a bit more than we are now. Fair enough. I mean, that is a fair point what Shelley has said. Referring to the Capitol Hill on DC, yep. And that's probably where the frustration lies. I agree. I would have said essentially we would have been better off as well. But, the one thing I didn't factor in is the Democrats throwing a curveball for everyone. I factored in pretty much everything. Gary Gensler beginning here trying to ruin the space. The SEC being quite slow maybe on processing essentially the lawsuits, or essentially Jerome Powell being a bit delayed on rate cuts. The one that, really most people didn't see coming is the Democrats not playing ball. I mean, we should have seen that one coming because they never play ball, at all. All they do is ruin the market space and ruin American lives. So, quantum reasoning is on the horizon. Gensler essentially is certified, but yep, he's no good upside down pineapple head. Democrats equals demons on wokeness, woke nation, pretty much. Yep. Now, China is what we're going to talk about next on tonight's live. China has just reduced its US Treasury holdings aimed gold preferences. Just a heads up, every time China drops their US Treasuries, the UK and Japan pick it right back up, to be fairly honest. And so does Tedo, to be honest, as well. China's $71 billion reduction in the US Treasuries highlights a strict shift in reserve essentially management, sparking essentially discussions about global financial strategies and Bitcoin role, aimed at their changing asset allocations. This move essentially underscores a critical gap between Bitcoin's positioning as an alternative reserve and actual central bank purchases, which favor essentially gold and influencing institutional and retail investor behavior. China's reduction of its US Treasury holdings by $71 billion marks that shift in global reserve management. The US Treasury essentially TIC data indicates steady declines in China's Treasury holdings, now under $800 billion. The People's Bank of China, which is a central bank, underscores gold and FX diversifications and as a strict essentially priority in its reserve management. China's shift essentially from US Treasury prefers gold impacting the global finance narrative. This move essentially is interpreted by some as a hedge against the dollar, yet Bitcoin sees increasing investor interest despite central banks' focus on gold. While central banks essentially opt for gold, Bitcoin and Ethereum gain traction among investors via ETFs. Bitcoin's rise suggests strong private sector demand reflecting shifts in essential investment strategies aimed at de-dollarization. In terms of the trends, macro essential de-dollarization and liquidity cycles are bullish for the crypto space, said Raoul Pal, the CEO of Real Vision. The Treasury essentially sell-off influences financial balancing, yet primary actions focus on traditional commodities, and both emerging and established markets show preferences for known value stocks, highlighting reserve managements and strategies aimed at economic uncertainties. So, China's central bank, essentially the People's Bank of China, has again decided to drop their US Treasuries. It's not a big deal, to be fairly honest, because every time they do drop it, the UK tends to pick it back up, and so does the Japanese market space. So does Japan's central government. Also, in terms of China going more towards gold, interesting play. I mean, you could say, they're seeing that as a hedge against the US dollar's failure, or essentially going against Bitcoin because China is on the verge of hating and liking essentially crypto. China is the biggest Bitcoin mining purchasing equipment there is, honestly, to be fairly honest. And there was a company that essentially creates Bitcoin mining equipment, and it turns out from the numbers of orders, China is their biggest purchaser of Bitcoin mining equipment. Ironically, China is also the country that's banned Bitcoin mining. They were the biggest purchaser in 2024. 2025 numbers are going to be coming out at the end of the year, but 2024, China was the biggest Bitcoin purchaser in terms of mining equipment. Now, putting that to one side and going into the XRP news on tonight's live. So, a little bit earlier on tonight's live, I read you the news regarding the CFTC essentially green lighting regulated essentially market spaces for essentially derivative market space and essentially the authorization they're giving out. And I said that Bitcoin and Ethereum pretty much essentially have given a green light to. So, and I also said there's more to that story. This is the second part to that story. Bitamor becomes the first ever CFTC regulated exchange to list XRP under federal oversight. A Chicago-based derivatives exchange received federal approval to list XRP as margin collateral and launch spot trading under the CFTC's oversight. The decision by Bitamor marks the first time Ripple's token operates within a federally supervised spot market inside the US. 3 separate regulatory bodies moved in alignments on XRP within the same week. Bitamor secured a CFTC authorization to include XRP in its regulated market structure, essentially activating both spot contracts and collateral acceptance across derivative products. The token now meets the same liquidity and settlement standards applied to traditional commodities in the federal markets. That is crazy, the amount of levels, essentially the amount of green light the CFTC has just given to XRP through Bitamor. A social media essentially user noted that the convergence of these 3 agencies with different mandates, the CFTC, essentially the Securities and Exchange Commission, and the Depository Trust of Clearing Corporations, all 3 moved in the same direction during the same time frame. The SEC did not challenge the SEC's approval, the CFTC's approval, creating an unusual moment for regulatory alignments. In other words, in the past, Gary Gensler would have said, no, the CFTC is not allowed to do this. But now we're in the present with essentially a Trump presidency and a new SEC. The SEC didn't object to it. They just let it happen. The CFTC greenlighting XRP. The DTC also essentially simultaneously advanced towards 24/5 settlement window, a shift focused on interoperability with digital collateral and real-time clearing. Bitamor's regulatory position connects it to institutional clearing flows, and exchanges at a level require regulatory clarity before listing an asset. XRP transitioned into a commodity-grade status within a federally regulated infrastructure. This places the token in the same operational framework as gold. XRP has just reached a level in the same category as gold and foreign exchange and treasuries. The regulatory structure now allows institutions to treat XRP as a collateral currency under federal oversight. That is unbelievable news regarding the CFTC. 1, greenlighting XRP in the derivatives market space. 2, XRP being able to be used as collateral. 3, XRP now being in the same category on a federal, essentially, market space, the same category next to gold and treasuries. And 4, this is also what's happening in Brazil in terms of XRP. But also, I just want to say, in terms of also XRP, the DTC, essentially the DTCC, greenlighting 24 5 days a week, essentially 24 hours, 5 days a week market space straight after the XRP announcement of a green light by the CFTC is interesting. In other words, is XRP Ledger or XRP itself going to be playing a role in the DTCC, essentially, going 24 hours, 5 days a week? Because it all happened at the same time. So, moving on from that, but sticking to XRP, Brazil is what we're going to talk about next. Brazil is massive inside the market space. I mean, they want to become some sort of a head in the digital space. And this is what's happened in terms of Ripple and XRP in Brazil. Ripple and XRP earn a pivotal academic acclaim in Brazil, signaling the future of FX evolution. So this is what's happening. Brazilian universities and economics think tanks are actively essentially delving into the transformative and potential of blockchain technology and digital assets, with a particular focus on Ripple's enterprise solutions and the XRP ledger. Recent studies and white papers from Brazilian universities, emanating essentially from leading institutions, indicate a growing consensus regarding XRP's utility in solving long-standing inefficiencies in traditional cross-border payments. Researchers are analyzing its speed, low transaction costs, and inherent liquidity features as key drivers for a more efficient, inexclusive financial system. This academic, essentially, scrutiny goes beyond mere observation, often involving essentially essentially metric models and comparative analysis against conventional correspondence banking networks as well. So, the Brazilian essential universities didn't just, come up with this conclusion by doing those sorts of major tests. They did every test possible to maybe show something negative inside the XRP ledger, but they couldn't even find one negative, just positives. For Brazil, a nation heavily reliant on international trade and remittances, the promise of a near-instant, low-cost cross-border payments is highly attractive. Academics recognize XRP's unique position as a bridge currency that can facilitate efficient value transfer without the need for a pre-funded Nostro or Vostro accounts. This operational efficiency not only reduces capital lockup, but also mitigates counterparty risk, managing this appealing alternative for both commercial banks and fintech innovators. The discussions within academic circles are moving from if to how. These technologies can be essentially integrated into Brazil's existing financial architecture, aligning with the broader national goals of digital transformation. Brazilian universities and leading industries are suggesting the XRP ledger should be integrated into Brazil's financial system, because after all the scrutiny and after all the testing, they couldn't come up with one negative about the XRP ledger, only positives. Ripple's long-standing essentially strategy for engaging with financial institutions, regulators, and academic bodies worldwide is evidently bearing fruit in Brazil. The company has actively fostered dialogues and partnerships to facilitate a deeper understanding of its technology. While direct commercial partnerships often grab headlines, the foundational work of educating and collaborating with academia ensures a robust intellectual and technical pipeline for the future adoption. This sustained engagement creates a positive feedback loop where essentially academic insights inform practical applications and real-world deployments provide data for further essentially research. The growing academic endorsement of Ripple and XRP carries a significant implication for Brazil's financial sector. It provides intellectual ammunition for policymakers considering digital asset integration, lends essentially credibility to institutions exploring Ripple, and educates the next generation of financial professionals on the capabilities of blockchain technology. In other words, Ripple has been investing for a while now in universities all around the world, and to get people, essentially students, to have a better understanding of the XRP ledger, have a better understanding of Ripple, what it brings towards the table. And that was a smart play by Ripple, because all those students from these leading universities around the world started testing on the XRP ledger, trying to find something negative about it, something that just doesn't work right, and they couldn't find anything. And instead, that has now turned into positive data that the banks and the governments can look into, because the banks and the government institutions do listen to their most brightest students from these top universities and all the test studies that they do carry out. And all the test studies from Brazil's universities and leading industries show that XRP Ledger is the clear winner for the financial sector of Brazil. This academic validation can accelerate regulatory clarity, foster innovation among local fintechs, and ultimately lead to a more competitive and technologically advanced financial ecosystem in Brazil. It suggests a future where Brazil could leverage digital assets to cement its position as a regional lender, or leader essentially, in the financial innovation. The increasing academic recognition of Ripple and XRP within Brazil marks a pivotal moment in the evolution of the nation's financial technology landscape. Other universities, top universities around the world, will now be also essentially reading and viewing Brazil's papers from these top universities on the XRP ledger, on Ripple, and all the tests they carried out. And all the universities will be reading that. And the other universities will also be carrying out pretty much the same tests to see if they get the same results. And if they do, which they will, then they will also have the same data to provide to the governments, so they can have a better understanding of who is really the clear winner as well, or to the institutions. Far more being essentially, Ripple and XRP within Brazil marks a pivotal moment in the evolution of the nation's financial technology landscape. Essentially far from being isolated theoretical exercises, these essentially top-level students, top-level institutions, top-level universities, essentially explorations on laying down the intellectual infrastructure for a future where digital assets are integral to an efficient and advanced cross-border payments that Ripple offers. And essentially, as Brazil continues its journey towards a digital economic transformation, the foundational work being done in its universities today could very well define the trajectory of its financial sector for decades to come, positioning XRP as a key enabler of this progress. Honestly, everybody else inside the crypto space, honestly, I'm not even joking about this one. Everybody else inside the crypto space is playing checkers. Ripple is just playing chess. It's just on another level. And this goes back to what I said, essentially, where Ripple can take footsteps that other blockchains just cannot, which is making acquisitions, getting licensing, expanding, and also getting universities involved, and so much more, because it's a private company. Whereas a foundation like a Solana Foundation, Chainlink Foundation, essentially, or any of the foundations out there for these blockchain projects, they can't make the same footsteps. They have to wait and be chosen. Ripple doesn't wait around to be chosen, to be used. Ripple takes action. And that's the difference. And why, essentially, this is why I say Ripple is here, everybody else is here. On that note, we have came to the endings of tonight's live. This was episode 417 of the CMF live show. The CMF stands for Crypto Miles Family. My name is Miles. You can tune to this live Monday, Friday, 10 p.m., long time onwards. The most recent news regarding cryptocurrencies, CBDCs, AI, politics, and regulations. Vital information for you to know about regarding the world completely transforming into a digital space. The disclaimer of this live, as always, is not financial advice, not political advice, and whatever I say is only for entertainment purposes. And I will see all of you tomorrow, same timing as usual. Also, I have to see what's happening with the Cotswolds, because I am going to the Cotswolds on Thursday, coming back on Sunday or Monday. But I'll keep everybody updated on that matter as well. Please support us, the government of Please support us. The government of the Islamic Republic of Iran is torturing us. We want a Shah. Our voices must be heard. I agree. The Shah is the best thing. Honestly, the Shah is the best thing for Iran. I agree, 100%. That news about XRP commodity is not going to go likely by Michael. It's not going to be liked by Michael Saylor. I agree as well. Thanks, Miles, for your great live show. I will wait for your call after the live show. Don't worry, it will be a quick call. Thanks in advance. No problem. Call, no problem. Good night, Miles. On the CMF. Thank you for a great live and news. Let's go, JP. By the way, thank you so much to everybody who smashed the like buttons and the retweet buttons of this live show on X if you watch us on X. Thank you so much to everyone who also liked the live show if you watch us on YouTube. And if you haven't, smash the like buttons, smash the retweet buttons, and put a comment outside the live as well. And also, if you follow and subscribe during this live show as well, thank you so much and welcome to CMF. Take care, Miles of CMF. Let's go, Ray. See you tomorrow, brother. Sometimes usual. JP, see you tomorrow, brother. Sometimes usual. Thanks for a great love as always. Have a great night. I'll see you tomorrow, same time. Artistic, see you tomorrow, sometimes usual as well. Good night, Miles of CMF. Great live. Your intellectual research on a daily basis is another level. Thank you, Miles. See you tomorrow. Free forever. See you tomorrow, same time as usual as well. Good night, Miles and CMF. Thank you for an amazing show tonight. See you all tomorrow. Joe, see you tomorrow, brother. Same time as usual. Thanks, Miles. Good night. Come to see you tomorrow. Good night. I will watch the entire show later tonight. Let's go, Scott. See you tomorrow, brother. Same time as usual. And good night. Thank you, loads, Miles. All you do. Have a lovely night, all. Lena, let's go. See you tomorrow, same time as usual as well. Absolute great live tonight, Miles. Thank you. Good night, Miles and CMF. Jason, let's go. See you tomorrow. Same time as usual as well, brother. Okay, we have reached night, Miles. Let's go, Funky. See you tomorrow. Same time as usual. I will see everybody tomorrow, sometime as usual. And just once again, disclaimer of this live show, as always, is not financial advice, not political advice, and whatever I say is only for entertainment purposes. I will see everybody tomorrow, same timing as usual, for the next episode of the CMF live show, which is episode 418 tomorrow. I'll see everybody tomorrow, sometime as usual. Everybody have a great day or a good night, depending on where you are around the world. Love you all. See you all tomorrow, same time as usual. Like, follow, comment, retweet if you already haven't. If you have, thank you so much. Thank you very much, Miles, for a great night. As always, have a good night. See you tomorrow night. All CMF, let's go. Call. See you tomorrow, same time as usual as well. Good night, Scott. And thanks, Miles. See you all tomorrow, CMF. Let's go, Shelley. See you tomorrow, same time as usual.